Good morning and welcome to Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at MarketSite is Kinahan. He's the Chief Market Strategist over at TD Ameritrade, and we're going to look at the monthly reading of the Investor Movement Index, and that is TD Ameritrade's measure of how their 7 million plus retail clients have been trading for the month of March. JJ, thank you as always for joining me at MarketSite. I would imagine the reading was interesting considering the activity that we saw in March.
It was, and we're actually up to 11.5 million now with Scottrade being integrated on our platform. And it was interesting, so it shows a couple of things. Our clients are still slightly net buyers of stock. However, the exposure they're willing to take to the market is down for the third month in a row. In fact, it's down to the lowest level we've seen in 2 years. So for people who may say, how does that work? What it really means is they're buying lower beta stocks, selling any of the stuff that was higher beta. And one of the big stocks they sold, which was a surprise to me that they sold it so heavily, was Facebook. And, you know, Facebook was down 25% from its all-time highs. Obviously, you've well documented the controversies around that right now. It was one of our top 3 held stocks, and people have had a nice run on it. And they're like, I just don't know going forward. So, you know, we have Mr. Zuckerberg testifying this week. So rather than taking the risk with it, they just decided to take some profits if they've had it for a while, or just lessen their exposure to that stock.
Well, I mean, that makes sense. You want to buy low and sell high, so why not wait for a more attractive entry point or to figure out where it's going to eventually establish its new ranges? So that sounds like the smart thing for me to do. But how was it on the sell side? Was it constructive as well as what you saw with the net buyers?
Yeah, so it was, like I say, you know, you see a stock like Facebook, you see stocks like Western Digital, et cetera, stocks that have nice runs where our clients are like, you know what? They've had a run. I just want to sort of sell those stocks and regroup. The one stock on the buy side, I think that's really interesting to me, and many may say, why would your clients buy that? They bought Netflix, they bought Intel, and I'll talk about those in a moment, but they bought GE also. And many people say, why would they buy GE? Especially after it's gone down many portfolios, many people hold it. And I think that you have to look at time frame. And one of the things when I look at that is clients are saying, nobody should be playing GE for a 1 month bounce. But I think longer term, that's a stock they still want to have in their portfolio. We'll see what happens. And again, a stock that's in the 12s now had a lot of issues. But I think that if I'm management, I take that in a very great way, that people believe in the plans they have as they focus on aerospace industries and healthcare, that long term is something people see the potential in.
Outside of Facebook, another issue was tariffs and how the headlines are really impacting the market. Do you think clients reacted to that as well?
You know, it's interesting. I think clients are trying to figure it out like the rest of the market is right now. The stocks, because they were still a buyer of an Intel, and, you know, many people have linked the chip makers with going to have problems with tariffs. I think one of the things you're seeing in tariffs, and, you know, Larry Kudlow actually talked about this last week, and I thought it was really well said. You're actually seeing negotiation, but you're seeing it through the press. I think what we're seeing right now is the sausage being made, so to speak, and it's a very ugly process. So, you know, I would expect that because of that, we have a day like today where we're up huge, looking over here at the Nasdaq's up 1.51%, all the major indices up across the board, and you know, the complete opposite picture of what we saw Friday. I would expect for us to continue to see this type of volatility.
Right, well, it's a great point that you had made, because these negotiations have always happened behind the scenes, and we don't find out about it until the headline actually hits. But this has always happened. This is part of the process. But I want to ask you a question in terms of overall volatility. 2017 was an anomaly. Right. It's not normal to see the market go from the bottom left to the top right of the chart throughout the year. We didn't have a 1% move at all last year. But to see these moves where it's 400, 500, 600 point swings within one session, would you consider that normal?
Well, you know, to your point, we had more 1% moves by mid-March than we'd had the entire year last year, this year. But what I would say is these 400, 500 point moves I wouldn't say are normal, but 200 point moves in Dow wouldn't surprise me, because to exactly what you said, we've returned to a more normalized 20-ish VIX. Historically, just below 20 is just where the VIX has been at. So you look at it, this is on a $23,000 index with the Dow. So the math is actually making a little bit of sense. However, because of the headline news, we've had bigger swings than expected. One thing to really keep in mind, we're going to start earnings this coming Friday. That's what the market needs. If you think about last week, one of the days we were up was the day after Mr. Zuckerberg actually took the calls from the press, and he did a very good job. What the market needs right now is the CEOs to calm the children, if you will, and just go out and say, this is what we see for tariffs. If Jamie Dimon comes out on Friday's earnings call, and says we don't really see tariffs being a big problem at all for earnings, I would think you'll see some of that pressure ease up. So that you want to hear from the individual CEOs. They have a better handle on it than any of us are going to, or any pundits going to. And they have to plan for this. So it'll be really interesting to see how they're planning for tariffs. And I think that will actually be the next step on where the market goes.
I always feel like the market's super sensitive to macro headlines when you have that 2 to 3, 4 week vacuum of no
That's
news
exactly
because
it.
you don't have anything to focus on. There are no corporate earnings. So I think with the banks kicking it off on Friday will be welcome for traders and investors to kind of focus on that and not be so predisposed to what's happening behind the scenes.
I couldn't agree more with you, Jill, and I would say this, I think we all have a nice expectation for earnings. It's kind of strange we're going into an earnings season and the earnings themselves to me aren't really the headline. It's the calls afterwards that become the headline now just because of all this tariff talk and all the talk about things that are happening over the next few months. I do think if you miss earnings, you're going to get absolutely punished.
Right.
But beating earnings, it may be harder to get the lift that you've gotten in the past, especially if your phone call doesn't follow up by saying, we are going to continue to crush it going forward.
All right. Well, thank you very much for joining us at MarketSite.
Always a pleasure,
And traders,
Jill.
thank you for joining me throughout the day. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.